Okay, I'm going first, huh?
Yes.
Hey, Bonnie. Hi, Zach. I'm Allie Schuyler, and my husband and I have a company called Capitalize on Your Uniqueness. And we work with business experts to help create like a knowledge-based platform from which they can then create numerous products and services. And we also work with people to help them turn into, to elevate their status into thought leadership. So we have a specific program where we work with them on that and also help them to create a more impactful social media visibility so that they become more of their persona visually as well as kind of on paper.
Amazing. Amazing. And obviously highly relevant right now,
Yeah.
in COVID times. So
Cool.
great.
So, Robert Friedman, you're next on my list, although you're muted at the moment.
No, I'm not.
There
Good morning,
he is.
everyone. So I'm Robert, as you said. I'm the CEO and co-founder of a company called Tech Prefab. And we developed a cloud-based platform that designs prefab buildings. And we actually, we manage the whole process of designing and building the buildings and the logistics of having them sent to the sites and project manage their installation. So we're an end-to-end prefab company with proprietary technology.
Oh, pretty place too.
Love it.
Michael Adler.
Hi, Bonnie. Thank you for having me again. And Zach, great to meet you. We have a lot of friends in common, acquaintances, but I'm a business and real estate attorney from the greater Philadelphia area. I do all sorts of tech incubations and other incubations, and I work with a lot of startups. And I saw your background in the real estate and tech space, and I saw your profile. So I'm looking forward to meeting you in person through Zoom.
Thank you.
And getting to know you and your background.
Thank you. That's great. It's always very exciting to tech nerds like us in the, let's say, prop tech, real estate tech space when people in the regular real estate industry, including attorneys and everybody else, are excited by technology and working to help implement it. So that's awesome. It's great to meet you.
Thank you.
Yeah, they were in a vertical that adapted readily. Scott Purdy, real estate. I know. Scott, you want to introduce
myself? Good morning. I'm becoming a sort of regular here, coming on all the time, and I represent a company called Cine Inc. We developed a crowdsourced video app that allows you to have multiple inputs from different people and hopefully create a professionally produced video in a very short time with multiple inputs, utilizing artificial intelligence and machine language to enhance that. We do have piece built now, and our next step is going to be looking for capital so that we can do all of the AI that's needed. Zach, I think you're not the same Zach that was on The Bachelor, are you?
No. I didn't know. I knew there was a
yeah.
Firestone on The Bachelor, Andrew Firestone.
Yeah.
I'm not related to him. I didn't know there was
Okay.
a Jack, but I'm
Yeah.
flattered.
Okay. Good. Just. I guess well, you're much better looking than him. So anyway,
Thank you,
should
Chef.
be on The Bachelor if you're not already.
I won't tell my wife. Yeah.
Okay. Yeah. No, I know. I keep hoping that they're gonna do. Well, I'm married, so it's not gonna work out. But I thought maybe someday they'll have like a mature Bachelor, for people like over 60.
Okay.
Like myself. But anyway, thank you for doing this today. I find these really very, very helpful and very appreciative of the time that you put in to give us out there some of the input and questions that we really have.
Thank you. Thank you for coming.
Thank you.
Tino.
Hey, Bonnie. Nice to see you. Nice to see you, Zach. Hey, so what we're doing is we're digitizing the process of getting things made. We're starting with wood furniture because it's a wasteful business that spends $9 billion every year on logistics. So it starts with the AR experience. You choose your product, you customize it for your space, and we get it made in your hometown in under 2 weeks. On the back end, so on the front end, it's just a simple user interface and e-commerce. On the back end, it's like an Airbnb for idle CNC machines. We're live in 15 regions. We're quarterly growth, monthly growth last quarter was 57%.
That's huge. Okay, congratulations.
Diego. Oh, you're muted at the moment. Diego, do you want, did you want to introduce yourself? Or no? Well, maybe later. So, Chana, do you want to unmute? There we go.
Oh, hello everyone. To be honest, I'm new to this space, new to the VC space. Met Zach a couple of months ago or so, and he's been really helpful, everyone. So thank you, Zach. And I'm just actually taking a backseat here and happy to watch, see how this progresses and see what becomes of Kettle Space and the space that you've created here for everyone. So thanks for having me.
Thanks for coming, Hannah. Hannah's the only person whose name I recognized in the crowd today. I was very excited to see that you came. Like she said, we connected recently. She is absolutely a rising star in the venture capital and prop tech industry. She's in the UK. If anybody knows of any amazing opportunities to send her way, please keep her in mind. She's a star.
Thanks, Zach.
So who do we have? Ishani. I hope I'm pronouncing your names properly. Ishani,
No, you are. Thank you.
Okay.
So my name is Ashani, and I'm a student like in the venture cap space. And I came across this meeting through Eventbrite, and I thought it would be a useful opportunity to learn and just hear from all of you guys. So thank you for giving me the opportunity to be in this meeting.
Thank you for being here, and great glasses, by the way. Matthew, do you want to introduce yourself? I'm just going down the line. Or I should say unmute and introduce yourself. I think you had to step away. Adnan, did you haven't introduced yourself yet, right? Oh, some people do get shy. So Irene Koo, let us know who you are and what you're doing.
Hi, good morning. I'm Irene. Nice to meet you all. I'm founder of Mama Koo. It's a food travel app. We take recommendations from food savvy locals around the world for specific destinations. We find out what to eat and where to eat that. So we cover 22 destinations. We're anxiously preparing for the world to safely reopen.
Oh,
That's
thank
awesome. If you have ideas of what I should eat on Long Island, please let me know.
Oh, okay, cool. Yeah, actually, we have a pretty decent guide for the Hamptons and Long Island area, so you might want to check that out.
Love it.
Cool.
Oh, so Carolyn Katz. Do you want to introduce yourself?
Hi, my name is Carolyn Katz. I'm a reformed VC, and now I work as a mentor with startups. I work with a group called SCORE. If you don't know it, we provide free one-on-one mentoring to startups and small businesses. We actually, not myself personally, but other New York SCORE mentors helped Kettle Space get started, which is why we've been involved with Kettle Space. And so I just like to check in periodically to hear from different VCs and just meet other members of the startup community to just get up to date on what's going on.
Oh, well, thanks for being here.
Awesome. Great to meet
Eric Jem, I haven't seen you in a long time. Why don't you introduce yourself?
Hi,
Oh, Eric?
Barney. How
Yes.
are you?
I'm good. How are you?
All right. Yeah, I'm I am working on the design. I'm a founder of company Eco Design, doing hardware and innovation, IoT and wearable, and I'm also part of New York Angel, so I also mentoring different startup, and I also myself doing a little bit different kind of hardware invention. So love to see how people do. I work with something like Tino and people like that. So yeah, I'm working to stop by and see how people are doing. Thank you. Nice to see you all.
Thank
Yes,
you.
in fact, you invested in Tino's company, did you not, Eric?
We collaborate.
Oh, okay. Oh, you collaborate. Okay. I'm sorry.
Yeah. Thank you.
Alex Ferber.
Alex just let me know that he's making tea, speaking of, and he'll be on in a moment. So.
Oh, okay. So who else do we have? We have, Matthew. you want to, I don't know if Matthew's back yet.
Yes, sorry. I'm here. My apologies. Yeah, so I'm a C-level executive on 3 different companies, mostly in the startup realm, 2 in the startup realm, 1 in private equity. And I am a regular here. Just wanted to see what was going on with Zach and just hear a little bit more about his, investment profile and see if there's any synergies there.
Absolutely.
Thank you.
Thanks for coming. Yeah, it's great.
So Adnan, let's see if you're ready to introduce yourself or if you just want to, no?
Yeah, I'm here.
Okay.
All right. So I'm the technical director for a company called Charidy Inc. And basically, what we do is we invented a way to take massive amounts of tires and just basically create building material out of that. So we constructed a few homes. We have also used the material on various roofing projects. And yeah, I'm just here to just listen in and, learn.
Okay, thank you for being here. So Diego, do you want to introduce yourself? I guess not.
Oh, Diego, it looks like he wrote in the chat. His name is Diego. He doesn't speak English at the highest level. So
I see.
That's what he wrote. He wrote that
That's
to all of us. He's a corporate finance student. So thank you, Diego, for coming. It's great to have you here.
Okay, I'm sorry. I just noticed that. So everybody, thank you for being here. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter covering technology and putting in, deadlines for programs and accelerators and contests for entrepreneurs, plus my weekly kind of sometimes snarky editorial. And we host these breakfasts every 2 weeks and have done for the last 6 years with 1 investor and a small group of entrepreneurs. And we want to thank Kettle Space, who used to host us when we were actually in restaurants. It's restaurant co-working. They've moved to an online platform, which everybody should check out. And I guess some of you are getting their emails, or I should say newsletters. So I'll post Startup One Stop in the news, in the chat. So if you want to sign up, it comes out every Tuesday morning. And once a month, we also host what we call Bootstrapper Breakfast with a small group of entrepreneurs with a moderator. Everybody helps each other, and it's people who are bootstrapping and aren't ready for people like Zach Firestone of Shadow Ventures, who's now going to introduce himself and tell us about wasn't that a great segue?
That was an unbelievable segue, Bonnie. Thank you so much, Bonnie, Mac, Kettle Space. I'm going to break protocol for one moment. And just, Bonnie, when you called on Alex Ferber, he was in the other room, I believe, making tea. But I just wanted to give him a shout out because I refer to Alex as kind of my rabbi in venture capital. He really has been a mentor to me, helping me to move into this asset class, learn the ropes. He's a founding partner at Green Egg Ventures, which is actually an investor in Kettle Space. So everything's a small world. So I highly recommend that everybody keep Alex on their radar.
Alex, we should come and speak at one of our breakfasts. I'll get your contact information from Zach.
I'd be happy to.
Okay, thank you.
Thank you so much, Zach.
Of course. So not the world's most exciting story. My name is Zach Firestone. I grew up in the Detroit area. I'm 29. I moved to New York a number of years ago. And in a nutshell, my background is in startups and also a little bit in real estate. And so when I was in college, a couple of friends and I co-founded a company called Welzoo. Welzoo was a homepage for charity. So you made us your browser homepage, chose any nonprofit in the United States, and every day just for opening your browser and landing on our website, we would split the ad revenue that came in with the charity of your choice. So it was a free way to support a cause. Did that for a few years, learned the whole startup grind, which was amazing. Really, really loved, I was the capital, among other things, of course, I was the capital raiser in our company. And for some reason, I really enjoyed that. I think a lot of people hate it. I like the storytelling aspect of that. So that's kind of been a common thread for me. Went on from Welzoo to sort of consult, work in a few other startups, Charidy, Gigameet, and MeVee in all different roles, helped them a lot with the capital raising and in particular business development efforts. Fell into real estate finance, Meridian Capital Group, downtown New York, real estate debt and equity deals. Thought it was time for me to see what a normal job was like. Turns out that's not a normal job, but that's a whole nother story. But, I spent a few years there kind of just learning the real estate game, something that I always wanted to know. It was good. It's a great space. A lot of great things can be done in real estate, but I personally am much more passionate about deep innovation and technology and kind of that startup hustle and grind and everything like that. And excuse me, at a certain point, suddenly, kind of out of nowhere, I opened my eyes to what was happening in prop tech. And for the uninitiated, prop tech, property technology, there are many terms for this, is simply any type of technological innovation. It can be software, it can be hardware, that is changing the game in real estate. Real estate is, of course, the world's largest asset class. And in most regards, it functions the same way that it did decades or really centuries ago. And finally, in the last few years, people have started to actually push that envelope and really build unbelievable new tech startups to change everything from how properties are developed to managed, to how rent is collected, to how security deposits are financed, to how mortgages are obtained, to how houses are constructed. I know, Robert, you mentioned your tech prefab houses. I mean, there is so much in the world of prop tech. And when I saw this, it just clicked. I said, this is something that I have to be a part of. I'd always wanted to go into venture capital. Like I said, when I was in startups, I loved the capital raising piece. I loved meeting VCs. I always thought what they did was very cool. And so I just started to talk to people. I started to meet founders in prop tech. I started to meet investors, angels, VCs, great people like Alex that I mentioned. I tried to actually work with the firm I was at, the real estate firm, to start investing in prop tech. We got a little bit, but didn't go far enough there. And then at a certain point, I just said, I have to kind of go chips all in, and I'm going to, I'm going to make this happen. And I was very lucky that right place, right time. I was at a real estate tech event. I had a few meetings scheduled, but one thing I didn't have scheduled was KP Reddy, the founder of Shadow Ventures, which I'll come back to in a moment, which is where I am now, was giving a keynote on one of the stages at this event at the Brooklyn Navy Yard. And KP's based in Atlanta, and he was in town. And I didn't know him, but he and I had briefly connected once on LinkedIn. It was a whole story. And I kind of just, I loved what he was saying. He's an engineer, he's built companies, he knows what he's talking about. And what he was saying about real estate technology really just resonated with me so much that I went up to him after the talk and said, hey, I would love to kind of join your efforts here. Are you looking to open a New York office? And he said, actually, yes, I am. And so just really fortunate. It worked out, all the pieces fell into place. And so for a little bit over a year now, I've been the New York office. I'm the entire office for Shadow Ventures. We are, excuse me, a seed stage, so seed only venture capital firm focused on what we call the built environment. Like I said, many terms for this, but we invest in hardware or software companies that are innovating real estate, construction, let's say architecture, design, anything that's kind of related to real estate. We're on our third fund. We're actually about to close out our third fund in about a month and a half. We work very closely with a lot of, let's say, strategic companies in our space. So a lot of our investors, a lot of our partners, our real estate firms and executives, construction firms, engineering firms, and the like. And so yeah, I split my time kind of wearing all those different hats here. So I've spent a lot of time on the actual LP fundraising side, bringing money into our new fund from those types of investors and others like family offices, excuse me. But then of course, also the main idea, which is sourcing deal flow, constantly meeting with unbelievable entrepreneurs, hearing what they're working on, seeing kind of at a high level first, whether it could even be a fit within our thesis, and then going through that process, working on diligence, and then ultimately in those few cases, making an investment together. So that's kind of a high level. I'll just close this rant here by saying that, I personally love it. For me, for my personality, it's a great mix of being able to be deep in this entrepreneurial world and ecosystem, but at kind of a bird's eye view. I get to be very ADD and jump around to different companies. Every day is extremely different. Every day I get to meet really smart people. Most of them are really smart. Some are delusional, but most are really smart, who are trying to change the world by doing very cool things with technology. So I'm always learning. I'm always sitting on meetings pretending I know what people are talking about. And most of the time I'll ask if I don't know, but sometimes I have to look it up afterward. But I'm always learning on the job, and it's a really fun and cool space to be in. So that's my story.
And I hope you all caught that to get his present job, he went up to the partner and asked for it. If you don't ask, you don't get. So questions, you guys have questions? You always have questions. Questions from the audience? Really?
Well, I have a question.
Sure.
Would love to hear your thoughts about the prefab space, which I'm in.
Yeah, I think it's a very exciting space. I think it's definitely going to be huge in the future. I think it's a big part of the future of real estate. I will tell you that admittedly, I personally am not kind of the resident expert on prefab within our team. I enjoy looking at a lot of the companies. We are invested in Icon, which is based in Austin. Icon 3D prints houses in 24 hours. We invested in them at the seed stage a couple of years back. They're doing very, very well. They have a lot of cool videos you can see on YouTube of how they kind of print with their own concrete blend through their printers. They've been building low-income villages in countries like Mexico, together with governments and other corporate partners. They just signed a contract with NASA. So I'm not here to brag about Icon in response to your question, Robert, just to say that a lot of my familiarity with the space in particular is our one portfolio company that I've gotten to know. But on a macro level, I absolutely am bullish on prefab, yes.
Great. We are too.
I don't know if I'm supposed to call on people, but Tino is raising a hand, so.
Yeah, so what do you think went wrong with Katera? What do you think went wrong with Katera? Because so I spoke with one of the co-CEOs of Blockable, and he had his opinions. What are your opinions on what went wrong with Katera?
Other than kind of, you know, what's been published, but I think it was one of these cases of too much capital. I think they scaled too quickly. There were plenty of inefficiencies. We've seen, you know, all different layers across the company. And, you know, SoftBank, by the way, I don't know if I'm choppy on everybody else's end. Since I re-entered, I see myself like a robot. But, you know, this was another case of SoftBank injecting capital, you know, as if the sky was the limit. And, you know, this speaks to kind of the greater balance of should venture capitalists, when investing, focus on profitability or focus on growth? And, you know, where's that line between kind of putting fuel on the fire and enabling companies to grow so that they can reach huge profitability more quickly, but also balancing out that this is still a business and needs to actually make financial sense within some reasonable amount of time. You know, SoftBank, similarly with WeWork, we saw this, of course. So I think it was a capital inefficiency more than anything else.
Yeah, the insight that I got from the executive at Blockable was they didn't follow Steve Blank's model.
Okay.
They superimposed their own thoughts on a very well-established industry, and that industry rejected it.
Okay. Yeah, I can accept that. I don't think that's wrong.
There always is that fine balance between whether you go for traction or profitability or revenue, I know. So we have a question. I hope I can read it. It was from Diego, and I'm having a hard time with the chat portion. So I don't know if you're having, oh, there. Diego said, when valuing a startup, what parameters are the main ones to focus on when deciding whether or not to invest in a project?
Yeah, I mean, I'll just answer for us, I guess. So a couple things. First of all, first and foremost, most funds, most investors will have some degree of a thesis, right? And by thesis, I don't mean necessarily like a philosophical wizard level crystal ball. What I mean is like, what kind of stage do we invest in? What sectors do we invest in? There are certain key criteria. So like I said, we're a seed stage prop tech and construction tech focused firm. If you send me, you know, a Series D vegan hamburger company, right, that obviously has nothing to, I might think it's a super cool company, but it's way later stage than we could possibly invest, and it's simply completely outside of the sector where we play. So that's really the first filter, is just, does this even fit what we're doing? Number two, the stages where investors invest really dictate a lot of what that process is, and a lot of what's being looked for. The earlier you go, the more qualitative kind of the metrics are, and the later you go, the more quantitative they are, right? If this is a pre-IPO company, it's people sitting, like, let's say at Insight in New York, looking at Excel spreadsheets and modeling out the financials, right? That's pretty clear. If it's somebody with an idea on a napkin, well, there aren't financials to model out. And if you're spending hours doing that, you're wasting everybody's time. And so we're closer to that napkin. We're not there. We're at the seed stage. We typically are investing in companies that are either just starting to make revenue or on the brink of, they're about to kind of bring in their first couple of enterprise clients type of thing. They have, you know, an MVP, a most viable product, minimum viable product. They have, you know, some working demo. They've got something together, but it's still very, very early. And so typically we're looking at the team. We want to see who these people are. You know, first of all, let me back up. First of all, what is the problem that they're solving? These people that are coming to us and saying, okay, we've got something that's going to change the future. What's the problem that they're addressing? And then to some degree, what's the solution that they're proposing? Now I say to some degree because that will probably iterate, that will maybe pivot, that will change, but we want to know how they're thinking about solving the problem, okay? The team is key. We need to know who these people are. Why are they, let's call it the right team to be solving this problem? Do they have, you know, a background in the space? Did they feel this problem firsthand? And they know how frustrating and inefficient it is, you know, in that industry, and they want to come and solve it, and they think that they figured out the right way to do it. Do they have, you know, education in that field? Whatever it might be, we want to know who the team is. Do we believe that this team of jockeys can do it? And it also is very, very important to us that at least one co-founder is a technical co-founder. This doesn't mean that that person has to write all the code for the company. And certainly in the long run, that is our hope, is that the company will get large enough that they won't. But we believe that from day one, there should be somebody on the team who's able to write the code and guide what's happening there in a general sense, versus just outsourcing it. We too often see from day one, everything outsourced to another country where labor is cheaper, which is fine, but more often than not, you end up with a garbage product and there's nobody overseeing how it's you know, being created. The market is a huge metric at the early stage. We're looking at kind of what the real addressable market is for this problem. You know, how much do we think back of the envelope that they can capture? And we need to know that, like, in sort of a conservative situation, if they capture X% of Y market, is this an explosively large enough potential return for us, right? Because at the end of the day, venture capital is expensive money, right? If you're building, let's say, a regular small business, you're building a local computer repair business or whatever it might be, first of all, you'll be hard pressed to find a VC who will invest in you because of the scale, but you're way better off going to a bank and getting debt, right? Venture capital needs, in order to work, it needs the possibility for a truly, truly explosive return. So if we invest, we're not investing because we're hoping to make 10% on our money. We're investing because we hope that we will, on your company, make, let's say, I'm making this up, 1,000 times return, right? And by the way, that will write off the 7 companies that don't make hardly any return at all. So those are a few of the kind of first metrics that we're looking at when we look at a company.
Zach, is there anything like in the personality of the founders that, you know, that draws you towards specific companies more than others?
Yeah, that's a good question. So, and I don't know if my answer here is right, Alex. And the fact that Alex is on this call makes me 10 times more nervous about my answers to these questions. I think a couple of things. One is founders need to be good storytellers, right? I actually was listening to somebody yesterday, actually in a Clubhouse room, I have to admit, who was talking about how, what'd you say, Bonnie?
Oh, I'm there in Clubhouse too.
Yeah, I'm just starting to flirt with the app a little bit. And she was mentioning how her father was an inventor who basically died with a garage full of unbelievable inventions that never saw the light of day because he didn't know how to talk about them to other people. So founders need to be able to tell a story. They need to be engaging, right? And be able to articulate kind of what it is that they're building and get an investor excited about it. But that's also a fine line because, you know, if you have somebody who can sell ice to an Eskimo, let's say, then maybe they're just selling me on the story. So you have to kind of decipher that. In a similar vein, you want somebody who almost sounds crazy, but isn't crazy, right? You don't, like, a person needs to be rational and balanced. You don't want delusional, insane people. You can't make bad investments in that regard, but you need people who are, not to be cheesy and cliche, but the think different commercial, the people who are crazy enough to think they can change the world are the ones who do. You need people who really believe something that most people don't believe. You need people who are building something that most of their friends and family say to them, this is a stupid waste of time. You should just go and work at Goldman Sachs. Why are you doing this? This will never work, right? The challenge is figuring out which of those people actually are crazy and will never work, and which of those people are, oh my God, genius, and most people just don't see it, but they might really be onto something huge. Oh, and one more thing I would add is honest, and this should hopefully be obvious, honesty and integrity is one of, by far, the most important things, by far. If during, early diligence with a founder, you know, they tell us, listen, like, we think we're going to be at X, Y, and Z. We're talking to Facebook and we think there's going to be a contract soon and stuff like that. That's all part of the story, and we're cheering them on and we're hopeful. That's fine. If somebody says to us something like, Facebook has a contract with us, Google has a contract with us, and then a month later we find out that those were just invented stories, that one time at a bar they talked to an analyst who works at Google who said, you know, maybe Google will become a customer, like, that is beyond the line. And that's a minor example, right? There are much larger examples. So we are only willing to invest in people that have high honesty and integrity.
Do you, on that note, do you have any like filters when you're meeting with a founder where you know, can draw that line between, you know, this is too much or this is, you know, just right?
With which part of what I just said?
Like you mentioned, you know, and I agree, sort of having this like crazy optimism about what they're doing and sort of seeing the future in a certain way. I guess, you know, when you're in a meeting, are there certain things you look for where you sort of draw that line between, you know, this person's got just the right amount of optimism versus, you know, this is a little too crazy?
Yes, they have to be grounded in reality and they have to be honest with themselves and with us. And what I mean by that is, big example, when I ask who their competitors are. If a founder says, oh, we have no competitors, nobody else is doing this, we're the only ones who can do this, you know, none of the existing companies address it in any way, like, that's delusional. That's like, they have to be able to say, okay, yes, we have competitors. There are 7. You know, these 3 incumbents aren't doing what we're doing, but here's why maybe they could. Here are 2 companies doing something a little bit different from us. You know, hopefully they won't encroach on too much, you know, and blah, blah, blah. If you distill all this down, even in kind of a bad scenario, we'll still capture 15% of the market, blah, blah. Like, that is kind of a balanced, rational approach where people can admit, like, okay, yes, I'm pitching you, I'm trying to get you to give me money, but I also want you to know that I recognize that there are risks involved, many risks involved, and I understand what they are, and we can talk about them together.
Next question, because I actually had a question that, Scott, go ahead.
I was just going to say, it's interesting that you say that, because we think that we're first to market with the totality of what we have. We have found a few competitors over the last year that are similar, but not exactly the same. So, and of course, those that we may not know about. And of course, we don't know that Facebook or Google or anything is also trying to do what we're doing. So we think, as you were mentioning, it's really good to hear our team is our strongest asset. We do have, you know, a programmer is one of our founders. We have another programmer in the Czech Republic. And we're at the point where they could probably do all of our AI programming, but it's going to take a year or so for them to do it. So we're in a process of interviewing companies now who could, you know, have whole teams of programmers to be able to get the AI portion to get up, I guess, what we're about to do. So I guess it's not really that I have a question, but I do wanted to say that it seems like that you do feel that the team itself is one of the most important parts. And the other question I had is the other difficulty to have. I'm the CFO, and the difficulties I have is when we're trying to make projections. All right, we're finding out what it's going to cost for AI now, which is a huge amount. But when you go in and try to show someone financials, you know, it's still guesswork. You know, we're hoping that we're going to do this. We do have some people testing at a company called Magnet Magazine out of Philadelphia, but that's the other thing. So in your values, you know that our projections are, a lot of it's going to be sort of taking a guess, but we feel our team is really strong and a lot of people who really have a high ethics about what we do. One of the things, for instance, we realize that if we're able to get invested and we do expand, that we need more diversity in what we're doing, because, you know, we're a bunch of guys that over the last 25 years have worked together on different projects. And then when this idea came out, we're together. So we're heading that direction. So thanks for the validation on what we think we're doing right.
No, of course. And that sounds amazing, Scott. And I'm happy to talk offline if I can be helpful further. I would say, yes, of course, we know that any financial projections at such an early stage are 99.9% to be, you know, not the way things pan out, of course, right?
Right.
But I would say the only thing that we want to see really when we're looking at projections at such an early stage is just how you're thinking about it, and that you're being rational and realistic, and that you have some semblance of an idea of what this looks like, and not that you think that this is a trillion, bazillion, gajillion dollar market of which you're going to capture 99%. Like that's kind of where that line is with performance. But yes, many.
It does lead me to another question that I'm not sure in the field that you're in, you're going to be able to answer, but we've been playing back and forth. Some of us think that we'd like it to be, there'll be a social part of it too, social platform part of it for users. And we're kind of go back and forth. Some people would like to have it totally free at the beginning so everybody could use it and get up, the amount of people using the app. And the other people think that we should charge some type of a fee. And I'm just curious on your feelings. I don't know if there's a right answer at this point, but on what you're thinking.
I mean, it's hard to say totally without knowing more information, but my gut tells me, just given the limited information, that if you can get paying customers in the beginning, get paying customers. Even if that means that they're getting obviously a great deal compared to, what a subscriber will pay a year or two from now, right? If you're making a product and if you're doing something that's solving problems for people, they should be willing to pay you for it.
Okay, yeah.
And that's a great test of the value, because at the end of the day, if you get 1 million free users, but then none of those 1 million people are ever willing to pay you for it, well, then you're never really going to make money anyhow. So if you, and maybe this means having different tiers. Maybe you have a free, freemium and then a premium, right? And the freemium is very, very limited. You get people in that way. And then maybe it's within 30 days, they have to convert. There are all different ways to do this, but the sooner you can get customers to pay you something to validate that your product is worth paying for, the better.
Yeah, I guess our feeling is it would really be people who are really interested in, video and art and pictures. And when everybody does a project with our system, there is a project manager who starts the project. And so we thought that would be the paying part, whether they paid, $5 a month or $100 a year or something. And then when they create their project, they can invite whoever they want, and all the participants that are feeding the videos into this central area where they'll be done, they'll be able to do that part for free because they're part of the team making the video. But if they want to produce them themselves, then there'd be a paying feature. So,
okay.
All right. Well, thank you so much. I appreciate your input.
Of course, my pleasure.
Next question. Because I was just wondering about something. What size checks do you write generally? What is the range?
Yeah, so we're typically taking about $1 million allocation in a company. Between us, and when we invest, we allow our limited partners to co-invest with us if they'd like to, put in a little bit more on a deal, which makes sense often because so many of our LPs are corporates in this world that we play in. So, but our full allocation, our full check as a group is usually about $1 million.
And how many? I was going to ask, how many deals do you not look at? We know you look at a lot. How many deals do you invest in, or how many companies do you invest in a year? Do you have a specific number that you target?
So it's increasing dramatically right now because of our new fund. So I would say that now we're probably going to be investing about 10 to 12 a year, something like that.
Okay. I'm sorry. Oh, Michael.
Zach, how are you sourcing deals in the last 9 to 12 months with COVID? So the typical networking events aren't happening other than coming to a kettle space breakfast and other ways. How are people finding you, and how are you finding people?
Yeah, no, it's a great question. I'm spending way too much time sitting in front of my Zoom screen like everybody else is. I got a standing desk so that when I'm sick of sitting, I can stand. But in all seriousness, excuse me, a lot of our deal flow comes from all over the place, right? So a lot of it comes from founders in our network and in our portfolio. That's a great source of deal flow. If we have a CEO of a company we've invested in who says, hey, this is somebody I know, an entrepreneur who's great, they're building something relevant to you, check them out. Like that's an unbelievable introduction. That's a great source. Other investors send us a bunch of deal flow, people at other VCs. Sometimes it'll be other VCs that are very similar to our kind of model and focus. Very often it'll be VCs that aren't. It'll be, a different sector. Hey, Zach, as you know, I invest in health tech, not prop tech. You invest in prop tech. Here's a deal I saw. I don't know much about it, but check it out. We get a lot of that. I'd say just from kind of the existing network that was in place pre-COVID, and then, we've done a lot of Zoom meetings, so we are constantly meeting new people, and those people are sending deals too. Some of it comes from our LPs, things like that. So a lot of our LPs send us deal flow. And then, of course, there's a tremendous amount of inbound, a tremendous amount of, cold emails, cold LinkedIn messages. It's very hard to sort of, to sort through those initially, because you just don't know who these people are, where they're coming from. You don't know anything about them, which shouldn't mean that you should put them at a disadvantage to deals that your friend introduced you to. I don't feel that way. I would also say, though, that most of the kind of cold inbound deals are totally irrelevant to what we do. It's somebody who is going and spamming anybody who invests in startups, and almost always it's irrelevant. So, if 1 out of 50 fall into our wheelhouse, then okay, it makes sense and we can look at it.
I saw that Tino had his hand raised. Do you have a
Yeah,
question?
so if you have a $1 million round strictly for Shadow Ventures, that means your pre-money's got to be in 4 to 5 million, and it doesn't allow any syndication. Is that correct? Aside from your LPs.
Yeah, so that's a very good question. So 4 to 5 million pre-money is very much in our sweet spot. Yeah, we're not the only VC investing. So we prefer to lead around if we can. We're happy to also follow on, and if we're putting in, let's say, $1 million, very often it's around $1.5 million, maybe 2. So it's case by case. Our valuation range is a little bit of a range. I'd say 4 to maybe 7 million is kind of in the middle. We'll go a little bit higher. We'll go a little bit lower. So it's a case by case basis.
Yeah, because that presents a lot of dilution at that. If it's a $1.5 to $2 million raise at X, the mentioned valuations.
Yeah, typically when it's a larger round like that, larger for us round like that, it's a higher valuation. So we've invested up to post-money valuations of, let's say, 12, 13. So we're kind of probably in most cases the more mature end of seed.
Hey, Zach.
Mm-hmm.
2 questions. One is, what other, obviously you answered my question about prefab, but I'm just curious, what other areas within prop tech are you seeing as most interesting to you and to the firm? And then the second question is, within these spaces, do you or do you consider investing in companies that might be competing in some ways with each other?
Those are both great questions. I appreciate them. Robert, number 1 is spaces within prop tech. So like I said, we like to look at this as, the built environment, pick whatever kitschy term you want, but because we invest across real estate construction and several related things. And I stress that also because, so our founding GP, his name is KP Reddy. He's a civil engineer by trade. He's built and exited many, successful companies, but he's been immersed in the engineering side of things. And so actually, up until recently, really Shadow Ventures has skewed far more toward the AEC, which is architecture, engineering, and construction side of the built world, than to real estate itself. Now it's more of a 50-50 split, which I'm happy about because I, frankly, have no background in AEC. I'm excited about the deals that are innovating real estate. So, but we look across all of those spaces, and like I said, hardware or software. We've talked on this call about, well, actually, I was going to announce a deal that we just did. I don't know if that's public yet, so I should keep my mouth shut. But soon I'll announce an artificial intelligence deal we did that was very cool in kind of the construction engineering space. But a sector that, just as an example, that I personally am very excited about is the intersection of prop tech and fintech. That might be because I worked in that space. I worked in real estate finance. I understand how ridiculously outdated it is. Some of the top performing people in that industry are literally using pen and paper to keep track of what they do. The more advanced ones are using spreadsheets, maybe Google Sheets. And so now that I'm seeing companies springing up, whether it's on the equity side, obviously there's cadre and everything that goes with that, or on the debt side, I'm seeing a ton of great companies right now that are totally revamping the process of obtaining, let's say, a commercial mortgage. That instead of calling up some human being and saying, hey, can you do me a favor and call 15 banks on my behalf and act like a ping pong ball going back and forth. And I'm not making fun of those people. I did that job. It was a good job, but I'm just saying it's a little bit kind of inefficient. I'm happy to see that now there's artificial intelligence that's being created to kind of make that process a lot quicker, a lot smoother, and better for everybody involved, the broker, the bank, the borrower, et cetera. So I'm very excited about the prop tech, fintech intersection. Your second question was about the competing companies within the portfolio. The short answer is no. We would not invest in a company that directly competes with another company in our fund. There are some small exceptions. You know, certain investments we've made have not been out of a core fund, but out of specialized vehicles that we've done, and for particular limited partners, individual LPs. So in those cases, maybe yes, but kind of in a general sense, we would not invest in two companies that are directly competing with each other. No.
Thank you.
I'll hop in with a question if I can.
Sure.
And I'll quickly introduce myself because I got in a bit late. So I'm Adrian. I'm the co-founder of Reveal Technology. We're building a music tech company, basically building a business suite of tools for content creators, so that they can make sure that they're credited properly, registering their rights, getting paid well, and that all the metadata is in place before music is distributed. Yeah, thanks. We're at an early stage, so just rolling out our beta, and some folks are starting to tell us that we should start reaching out to investors and think about fundraising. So my question to you is how early do you like companies reaching out to you and building that relationship? At what stage do you want to start having them on your radar?
Early. That's a great question. Early. The last thing that we want to do is have an entrepreneur call us and say, hey, I need money tomorrow. I've got a round happening right now. There's $1 million left. Will you take it? I need to know by Thursday. Like, unless you are creating something that is very clearly going to be the next Google, we're not going to participate in that round. We like to know founders over time. We like to build a relationship and trust with you, which I know can be frustrating because you don't know which investors that you're getting to know now are ultimately going to invest. And the question is, how are you going to spend your time getting to know 50 investors? I'm not suggesting 50, I'm just making up a number. But I would say you should, as early as you are comfortable doing, you should focus on kind of figuring out some reasonable number, small number of investors that you think are the right partners for you at some point in the future. For whatever reason, you think they're experts that you want on your cap table. They know your sector. They know what you're doing. You think that you'll jive with them. Get to know them early, and in a casual way. You could reach out and you could even say, hey, I'm not raising money right now. I really appreciate, the sector that you play in and your expertise in it. I would love to know you. I'd love to open the dialogue, and get to know each other. So that would be my recommendation.
I'm always trying to impress this point upon people. In fact, there was a founder who showed up she used to come to our breakfast all the time when they were in person, and she met a bunch of investors, some of whom invested early, some of whom invested later stage. In her A round, 2 of the investors who wrote checks, she had met at the breakfast and had stayed in touch with them. You just don't know. It's very good. It's always good to start the relationship early.
Definitely.
Zach, I'm just curious, to get to your current position, what do you think had more of an impact on your expertise in this area? Those years of the fundraising for the organizations, or your experience in real estate or building? I know what funds. Listen, I got to give you a lot of credit for that. My wife has been in development for years, mostly for nonprofits, raising money. I don't know how she asks people for money because I'm terrible at that. So I just wondering, or do you think they just kind of both match to create the right combination for this opportunity?
Yeah, I think the startup experience more than anything else. I think that I was very lucky that I randomly also had real estate experience combined with the current excitement around prop tech. And so I was able to leverage that and I share that excitement in prop tech. So I'm happy that it worked out that way. But that everything fell into place nicely. So that sector kind of helped. But I think definitely the startup experience, having co-founded a startup, having raised money, like that more than anything else, because, I'm not saying that that's necessary to be successful as an investor. And the jury is definitely out on me whether I'll be successful as an investor, knock on wood. But, look at Fred Wilson at Union Square Ventures, right? He's been a career venture capitalist. He's never been an operator, and he is a phenomenon world superstar. So I'm not saying that at all, but I'm just saying in many cases, if somebody is looking to fill in some space on their resume, so to speak, before attempting to move into venture capital, I would think having experience in an early stage startup context is probably the best bet. And you said your wife is in fundraising for nonprofits?
Yes, yes. She's worked for several colleges. She's been the executive director of development. She worked for Safe Kids Worldwide out of Washington, D.C., where, they're helping the young kids. And right now she's with the Hearing Loss Association of America. Did a great job this year at their fundraiser. And she also does some volunteer work, part of a committee in the Italian American Association.
Very cool.
She's Italian, so but she's been doing development, they said, for 30 years. And I to me, that would be like the worst job to do. But I guess if it's something you're good at, it is helpful. And we need those people no matter when. I've worked. I retired from working 26 years out of college. She's worked at Rutgers, Seton Hall, a few other colleges as well, and raising money. Stockton College here in New Jersey, raising money for those things is a big deal because they need them for the students. So
totally.
Yeah.
I would say when I was in high school, there was a nonprofit that used to pay high school students $10 an hour on the weekend if they wanted to come and make cold calls. Fundraise. They put out pizza and stuff like that for the kids, and I did that from time to time. And I think probably cold calling and asking people for money when I was like 16 that probably helped. So.
Oh yeah, yeah. It does help because you sort of you're at like the worst side of it. You're asking for something, so it's really a good foundation builder for anybody's career, especially doing that when they're younger.
Mm-hmm.
But you're still really young. My son's older than you. So.
Questions? I wanted to see if anybody had a question first, and feel free to raise your hand or let me know or put it in the chat. But I was in a Zoom session and there were mostly investors and mostly Silicon Valley investors, most of whom are no longer in Silicon Valley, but of course maintained their addresses there. And they were talking about Zoom and the virtual meetings and how they're able to meet a lot more entrepreneurs and vet a lot more companies since we've moved on to online platforms, because it's not sitting in the office or going for a hike, which you can do in Silicon Valley. So thoughts?
Yeah, I hope that's right, because I'm here in New York and I think I'm in New York for good. So I hope that you don't have to be in Silicon Valley to make good investments.
Oh, no, that wasn't the point they were making. The point they were making was how Zoom has made meeting with entrepreneurs accessible for entrepreneurs all over the country, and how they have much more, they can see many more deals and many more people.
For sure. No, and sorry, I get it. I was going to connect a point there, which was, Jason Calacanis, who's a legendary angel investor. Okay.
Well, I know very well.
You know him very well?
Very well.
Okay. So please introduce us.
Oh, sure. In fact, it was Jason who was making this point.
Is that right?
Yes, it was. Oh, I'm happy to introduce you to Jason.
So Jason wrote a book called Angel.
Yes, he did.
Chapter 5 of the book, I think it's chapter 5. The title is, Does One Need to Live in Silicon Valley to Be a Successful Angel Investor? And the entire chapter is one word, and the answer is yes. And I just yesterday was talking to somebody about this, and that person knows Jason well. And that person told me that Jason has since retracted that philosophy, and now, in particular, because of Zoom and everything, has changed that opinion.
Yeah, he's moving to Austin, in fact.
Yeah, exactly. So now we have to burn the book. But anyway, point is, I agree. I mean, I think it's great. I think, yes, entrepreneurs from everywhere now have access to venture capitalists. If you're building somewhere in the middle of the country and you don't have unlimited pools of capital to just get on planes and fly to, which most people don't when they're entrepreneurs building companies, those people were historically at a disadvantage. Now everybody's over Zoom. And so access has been opened up. I'm from the Detroit area originally. I've been speaking with entrepreneurs in my network back home in Detroit, who have been sharing this experience with me, that now they're meeting with, Silicon Valley VCs that otherwise maybe they would have reserved kind of a few days on the calendar to fly there and hope that they could book certain meetings with people that are difficult to book time with and get in front of. And now they're able to reach those people at both their conveniences. So I fully agree.
Yeah, I agree with that. I left New York in March, as did a lot of people, and I'm back in my free place to live in Cleveland, but I'm also from Detroit. But I've been getting inbound. I went to Andover High School after Andover closed. So
yeah, now it's Bloomfield Hills High School, right?
Yeah. Where are you from?
West Bloomfield.
Yeah, so I've been getting inbound from everywhere, both subsequent to demo days or pitch events that I'm able to attend on opposite ends of the country, and inbound from Paris. It's kind of cool.
That's awesome. That's so funny you went to Andover. We have to connect more, Tino, and talk about this afterward.
Okay. I was going to ask if you wanted to share your email address or put into the chat, or
Yeah, that's fine. I'll put it in right now.
It's funny with all this, the Zoom, I, last 17 years of my career, I was in distance learning at the college I was at, retiring as the director. And I was always pushing for doing tech and doing like online things. And everybody always at colleges wants to have meetings in person. And I think if there's any silver lining to this past year, it's that people have learned to use the technology so much. I just think about in the past how much would help. So especially like, Zach, you said you're the New York office, but you're living on Long Island.
that's New York.
Yeah. No, I know, but I mean, it just makes it easy. My wife's company is in Washington, D.C. And before she was driving down, we're in New Jersey. So now they get so much more work done. It's funny, in another career, I was a regional manager, a regional vice president for a company, had an office in Ypsilanti. I don't know how far that
Yeah, it's
was
right near Ann
from
Arbor.
that, but
Yeah, sure.
yeah, Ann Arbor. Oh, what a beautiful town Ann Arbor is to raise a family in a beautiful place like that.
That's where Larry Page went to college, in fact.
Go Blue.
So questions, comments? I was going to mention that we had an investor speaking a few months ago who moved back to Ohio early on in the lockdown and had only been investing in New York. And it's a sizable fund. And all of a sudden he looked around at what was going on in Ohio, and he's looking at companies locally. And I think that's going on a lot as well.
Who's that, Bonnie?
Oh, what's his name? Sachin from Third Prime.
Okay, because I'm back in Cleveland, so.
Oh, I think that's where he is, Third Prime. I'll introduce you.
Thank you.
I believe he's still there. Yeah, he said it's great being out here. He loved it. Yes. So questions, comments, observations?
If that's okay, I'll just ask a question.
Oh, absolutely.
Going back to what you said before, Zach, about honesty. It just hit me because actually I just spoke to a founder either yesterday or the day before, and he was saying that I asked him about a competitor. So it was funny that you said exactly the competition. And I said, tell me who your competitors are. And he said, well, we're the first in real estate. So I said, tell me more. And then I actually just, point blank told him, and what about this company? And he said, well, yeah, they're in the B2C and we're doing B2B. So we're completely different. Mm-hmm. One look at the website told me that that's completely not true. Would you classify that as a white lie, as a lie, don't touch him? What do you think?
It might be, that's a good question. It's hard to say, but it might be just that he's confused. It might be that he just doesn't realize enough or understand enough what he's doing. It might even be that he misunderstood your question and just was embarrassed, and just wanted to give you an answer. I don't know without more context. If you were able to determine that he definitely knows that this other group is a direct competitor of hers, that's like a stupid thing for him to lie about. You know what I mean? That's something that's very, very easily verifiable, as you did on his website. So I have to imagine that he wasn't trying to trick or deceive you, because it's just out in the open. I think probably he doesn't understand the competitor, or something about his own business as it relates to the industry. So hopefully that's harmless.
I mean, if he doesn't understand something that relates to his own industry, would you take that as a red flag? I mean, yes. Shouldn't he, of all people, know?
I would expect that when a founder shows up to pitch us, they know the basic landscape of the industry that they're building. They don't have to be experts. They don't have to know how much money every company made last year, but they should know who the main competitors are and what they do and how they are differentiated. Yes. But it's fine. You can also send somebody to go and do their homework. You can politely say, listen, I love what you're doing, but I think you need to, become more knowledgeable in this space, so go out and do your homework and, feel free to come back to me or send me a follow-up once you, know a little bit more about the competition and really have a clear understanding that you can articulate about why you specifically are differentiated and why you're going to capture X%, a big enough percent of that market.
I mean, because essentially, I think they were doing the same thing. It's just that he was positioning himself as exclusively for real estate, whereas the other company were positioning themselves open to the broader market.
Yes.
So I think that's where he kind of.
Yes, I've seen many of those, especially tech-enabled services and stuff like that. Yeah, a lot of prop tech has. A lot of companies that are building in the prop tech space have been sort of iterations of existing things that now they put a prop tech lens on and say, oh, we're the only ones doing it focused on real estate. And then it becomes a fine line of, okay, but what if I just went and got the existing product, which is great, and just spent 5 minutes customizing it to my needs? Like, would that be the same thing? Or is there something that really is proprietary and different about the fact that you're focused on real estate that makes it a game changer for a real estate person? So.
Right. So would you find such a company investable if it's just got the lens, as you put it?
If the only differentiator is, hey, we're Salesforce, but we're Salesforce for real estate owners, probably not, unless there was something like so amazing that they had done, that they had so drastically changed the CRM experience that like a real estate owner really wouldn't want to ever be bothered again to go and use Salesforce. The answer is no. If that's the only distinction, that, oh, we focus on real estate, great. You know, I know.
Yeah, you have to look. I think the industry characteristics matter a lot because, yeah, your customer, you have to conform to your customer.
Yes, agreed.
Yes, and speaking of websites, I work with entrepreneurs and I mentor entrepreneurs as well at accelerators, and they might have their executive summary all beautiful and all nailed down and their pitch deck. It's also important to have that website or that app there, especially the website, because I always tell them, and you can confirm or deny, Zach and Shauna, that once you look at the executive summary or the pitch deck, the next thing you're going to do is go to the site, right?
Oh yeah. And look, don't get me wrong. I don't fault somebody if they're in the earliest stages of building a company and they don't have a website or it's just a landing page. Like that's not a, that's fine. Especially if they're really early stage, like just throw up a landing page, spend 10 minutes on it, coming soon, whatever. That's like totally acceptable. But ideally, I should be able to find something about you. Something about you, something that points to maybe what you're doing, maybe not, again, depending on how early it is. But it is always nice when after seeing a pitch deck, I'm able to go and do, another few minutes of very light, simple research and see something else. So.
Yes, they will check your LinkedIn as well.
Yes. Yeah.
Absolutely.
So I have a question. Zach, do you have are you making like a broader assumption or thesis around people staying or like continuing to move out to the suburbs from cities past the post-pandemic? And actually, I was going to ask, were you living in the city before you went to Long Island? And do you think you're personally going to stay there?
So I'm part of that statistic. Yes, I here's what I would tell you. I grew up in the suburbs, like Tino and I were saying. Tino, that's how you pronounce your name, right, Tino? Okay, Tino and I are both from suburban Detroit. To me, like that's where you raise a family. Grass, trees, like I love that. I moved to New York City as a single person, knowing that for a few years it would be great to live in Manhattan, and it was great to live in Manhattan. And eventually I got married and we still lived in Manhattan, but we always knew that ultimately we would move to the suburbs. COVID, I would say, accelerated it by about a year. So in other words, we were planning probably a year from, we just moved last month. We were planning probably a year from now to move. And once we were already doing that, and then we were locked in an apartment anyhow, we said, all right, so let's just move now. I think it's a mixed bag, right? It's there. I'm hearing plenty of people expressing their frustration over the fact that now they're in the suburbs, whether they bought a place, rented it, or they moved in with their family, and now they can't wait to get back to the cities. They're also waiting for the cities to reopen, depending which cities, right? So it's a balance. I think it's an ebb and flow, like anything else. There's migration here, there'll eventually be migration there. Humans are social beings. I think plenty of people move back to cities. I do not think New York City is dead. I can't give you an intelligent prediction of really kind of what I think the lasting effects will be in that aspect. However, what I do think is that work will forever be a hybrid type of situation. I do not think that, by and large, white collar workers, anybody who's able to do their job from a computer or an internet, a mobile device or whatever it is, I do not think that the majority of those people will ever go back to 5 days a week in a central office. I think most people, some will work fully remote. I think most people will do 2, 3, 4 days in an office, right? And the rest at home or wherever they are, because we all have great internet, these days. And I think it'll be some kind of mix. It might be that depending on the company, companies take little satellite offices in kind of smaller, suburban downtown centers and stuff, so employees have access. I don't know the specifics of what it'll look like. Dror Poleg, Drorpoleg, the author of Rethinking Real Estate, is somebody who thinks about this a lot and writes about it a lot, and I like most of what he says. So you should look into him. But yeah, that I'm very, very bullish on. I feel very certain that the future of work is at least hybrid.
Yeah, I think that restaurant co-working, I mean, it's a great opportunity for restaurant co-working. An investor friend of mine moved for 6 months, not far from here, and she was like, God, I wish that there was a coffee shop, because it's not really that locked down, that I could go to just to get out of the house. And a lot of reasons, I hear from my readers, a big reason why they moved out of the city and into the suburbs or wherever they went off to is because it's like working on a kitchen table or in a basement, in a separate room, having space and peace and quiet to work and get work done without having to, I'm about to serve lunch.
Totally. And by the way, if Kettle Space wants to open a location near me on Long Island, I would strongly consider going and working there a couple days a week. So
I hear that a lot. It's like they're looking for restaurant co-working. So questions?
Yeah, I have a question sort of following up on this whole, remote working landscape that we're in. We hired a couple of interns during this pandemic, and hiring remotely was an interesting process. We would have some happy hours with them prior just to sort of get to know them, bring them on some meetings as well to see how they think, etc. But I'm curious to what are some of the things that other people in this call might have, done to vet people and get a sense of the fit, and what worked really well, maybe what didn't. Just interested to learn more about what you guys are doing.
Well, I know one of the things that I've learned is ask the person to stand up to see if they're wearing pants. And then, that's maybe a good in there. But no, I haven't been in that, but I know my wife has had that where she's, some of the projects she's working on and had to do it, online through Zoom with people. And it seems to have worked out fairly well. I'm a big believer, like I see when you're working from home, as Zach was saying, it's not 9 to 5. I mean, it's 7 o'clock, you finish eating and you get an email on your phone and then you run up to your home office and you're still doing. So I think people are actually working more. I know in my career, as I said earlier, I worked in distance learning. There were times when my kids were young. I could really have done all my work from home except for meetings. They'd be sick and I have to call in and say, I was a single dad at the time. And I'd say, my kid's sick. I got to say, and I'd work from home all day. And then my boss would, I turn in my voucher for taking a sick day. He said, no, everything got done. You did all the work, so it's, I've known a long time from this, but yeah, that is an interesting question of the new people. It is important to get to know them, to get a feel for them in person. But I think for right now, you can still always meet them at a coffee shop somewhere, maybe with this outside, depending on the weather. We have found that this winter has not been too cold, and we've been doing outside things still through December and January, which has been really nice. And sorry to usurp your question there. I don't know if anybody else had something better to add than what I did.
That does make sense. One of the, I think, the valuable aspects of going fully remote is that you can find talent beyond where you're located, right? So we've been working with a UX designer in Serbia, and she's amazing. And we hired an intern that was in Dallas, and I'm usually in New York. So even a distance, socially distanced meeting was not necessarily possible. And maybe, I don't know, maybe Zach, you go through a similar process when you're meeting, when you're meeting founders, and curious to to know what that looks like when you're trying to get a sense for their personality and whether there's a fit there.
Yeah, no, it's definitely not the same as meeting in person, right? It's the next best thing, for sure. And at the beginning of COVID, right away, a lot of VCs came out and said, we're never going to invest in companies that we only meet over Zoom, never, because we need to feel them in person. And then all of those VCs have made investments, through Zoom. Yeah, ideally, if we could meet somebody in person, we would. But like we said, even the geographic piece, right? Investing in other cities and stuff like that. So I think it's the same sort of diligent process, like we were talking about earlier, of getting to know the founders over time. And if it's through a computer screen over Zoom, fine, that's what it is. You and I are looking at each other. We can get to know each other this way. We could have scotch together over Zoom and really, relationships can be built virtually. So I think, maybe it takes an extra 10% of being careful and maybe a little bit more time or whatever it is. But I think the bigger issue in my mind is what you were asking about first, which is really hiring employees, and then that's funny, Scott, and also onboarding employees, right? When you're a new employee or joining a new organization, you want to understand the culture, you want to meet people, you want them to meet you want to be part of it. And you need to be trained properly for the organization. That's all difficult virtually, I think. So that I think is one of those things that kind of, once the world is vaccinated and things reopen and stuff like that, even if we're on, like I was saying, hopefully hybrid work models or whatever, I think probably new hires should, where possible, come into an office initially, and get to know the team and the company and stuff like that. But yeah, I'm with you. I don't know the answer in the meantime.
It's funny, I joined a company a few months before the whole lockdown started, and we were always working over Zoom. The entire team has been remote, and it's totally used to it. But just some people were working that way before, and all of a sudden everybody discovered Zoom. Anyway, next question.
Zach, can you guys hear me?
Yep.
All right, Zach. So I just wanted to ask you, so as I previously mentioned, the space that we're operating in is in manufacturing. So we've been working on, this, with, patenting and, engineer testing and whatnot on this, material that we're manufacturing now, which we call Eco Block. I mean, it's basically, it's made out of, recycled tires. It's 93% recycled content certified. And so we build houses out of this material, and we also use it in roofing, as I mentioned earlier, for, creating rooftop garden terraces. And we have a factory set up, 20,000 square foot factory. We have, 15 employees, and, like I mentioned, we've been in this process, 6 years now, and worked through everything. I mean, with everything that I said, is this, the company, our company, is that something, are we, too late to get into, seed funding, or, where do we fall in that time frame? I guess I'm not very well versed in seed funding and that type of space. So I just wanted to get your opinion on that.
Sure. Yeah. So I don't quite. How do you say your name? Adnan?
Yeah. Perfect. Yes. Just like that.
Adnan. So Adnan, I don't know enough about your business, right? I don't know enough about your space. It sounds to me, so you're saying you repurpose tires and rubber materials like that?
Yeah, that's correct. So we basically take a used tire that would normally be either burned or just completely discarded in a landfill, and we grind it up into crumbs. So the crumbs are, they still have fibers in them, but we remove all the metal. So that's a whole separate basically business where tire recycling. But then from there, we take the crumbs and we mix that all together with 3 different cements that we, the blend is, patented and everything. So then we create these panels. The panels are 2 by 2, 2 feet by 2 feet, and they're 3 inches thick. And we basically set them up, and we can build a whole house out of the material. And we've built, demo homes. There's, a video of that on our website. We've done, extensive testing over the past 6 years. With UL and, a bunch of different, testing agencies locally that are around here. And like I mentioned, I mean, we have the facility, we have the machinery, we have, a process, assembly line set up. We have, distribution partners. We have private label agreements with the, manufacturers that kind of tie in with our material. And I mean, I guess, we're pretty lucky because we've, been self-sufficient at this point, self-financed, because we do own another company that's been in business for 30 years now, and it kind of the other company has really helped us in that regard, and also with knowledge needed to get into the space of roofing,
right,
and everything else that's involved with that. So yeah, I guess that's where we are now.
So, okay, that makes sense. So it sounds like a great business that you've been working on for 6 years. Is it a, I mean, I don't need to ask any personal questions. Is it, a profitable business? Is it a business that's generating substantial revenue right now?
Sure. So, yeah, I can tell you right now we have, we are still early on as far as getting the material out to, clients and, getting, I guess, selling the material. We have one project that's a very major project that we're on right now. It's a very high profile job for us. That project is basically, we financed it. So it's not something that the owner actually bought, but for us, I mean, it's a big deal, obviously, because our product is going to be on this very, big prestigious project down here in South Florida. So
yeah,
at this point, no, we're not profitable. Everything is just going into creating the material, running the factories and everything. Yeah.
Right. No. So that's great. I mean, that makes sense. You're reinvesting in the business. My question that I'm trying to figure out, and we can maybe talk more offline. You can shoot me an email with more info. I can try. Hopefully, I can try to be helpful. But my question really here is whether this is the type of business that is a fit for venture capital funding.
Sure,
right.
Sure.
So I think part of that depends on kind of where you want to take it in the longer run, what your goals are, what you want to do with the funding. To me, this sounds like this could be an amazing kind of manufacturing business, right? Which can be an incredibly profitable business. It can generate incredible amounts of money for you as a founder. That doesn't necessarily make it a venture backable business that a tech focused venture capitalist would, put in money today to lock up for 10 years with the hopes that the company is going to produce an insane return on that capital. It's just a different type of business. And that's not in any way to minimize it or to say that it's any better or any worse. Again, for the founder of, let's call it a small business or a medium business that takes a traditional bank loan and builds a business, like for the founder, for you, the CEO, or whatever your position in the company is, like that can be for you incredibly, literally enriching and financially lucrative, even if that company is not a company that will one day be a multinational, technology conglomerate that goes public and produces returns for a venture capitalist. So that's my fear. My fear is that you're probably maybe not, I don't know enough about you. Maybe the company is not enough of a technology scalable company that would make sense for a VC to invest in. And by the way, it probably wouldn't therefore also make sense for you to give up so much equity in your company that you wouldn't have to when you could probably obtain traditional financing, which is much cheaper capital. That would be my thought.
Sure. I appreciate that. Thank you, Zach.
I also wanted to add that there are VCs or funds that invest in quote unquote lifestyle businesses. Indie VC comes to mind. I can't think of another one off the top of my head. Maybe Zach, but
that's a good point.
Yes.
Yeah, and you can also design your own hybrid instruments on equity crowdfunding sites like WeFunder, which may be more appropriate for infrastructure constrained manufacturing business.
Also a great point.
Thank you guys, appreciate that.
And I can if you're interested in WeFunder, I can provide some insights on that and get you a discount on your fees.
Appreciate that. Thank you.
So we have time for one or two more questions. If anybody has a question. Otherwise, as we do sometimes, I'll ask Zach if he has points he wants to reiterate or something insights he'd like to share from having heard all your questions and listened to what you're doing.
No, I appreciate that. I think you've heard me talk enough. I'll let everybody go 2 minutes early and spare you part of your lives. This was wonderful. I really appreciate everybody making time to come and be here, and your questions and everything like that. And I would just say, please take my email address down, and if there's any way I can ever try to be helpful, hopefully I can be helpful. I would love to do so. So thank you, Bonnie. Thank you to Kettle Space and to everybody for hosting me.
Thank you, everybody. Thank you, Zach. And I hope you all got his email. And we'll see, our next breakfast is in 2 weeks. So hope to see you there. It'll be in the newsletter, and Kettle Space will share it as well.
Excellent.
Thank you so much. Thanks, Zach. Appreciate it.
Thanks, Zach. Thanks, Bonnie. Thanks, everyone. Bye-bye.